Some of them are pretty eye-watering, up to sort of 35k and things like that. And they will be worrying people. And of course, the prevalence of that will then worry more people as it hits the industry press and all the rest of it. So that much is true. The article references the 2% extra tax that's been put on all unearned income, much as that's not a popular way of framing it. That is the economic way of framing it. But that doesn't kick in until 2027, of course. Look, a lot of landlords are not prepared for these changes in the law, but I think it's probably worthwhile pointing out that a good 50% of what the Renters' Rights Act is trying to address, there's already legislation in place for that. And legislation isn't the issue. Enforcement is the issue. But there are all these multiple reasons to go. Making tax digital is another one for people who are running very small operations. You know, it doesn't mean anything to us because we already use bookkeeping software, and it's a button to press. It's no big deal. We keep everything up to date on a monthly basis. But the smaller you are, the more that's likely to impact you. There's a ton of stuff that people aren't going to like. Going on a register. I mean, we associate the word register with some pretty negative connotations in this country, don't we? That won't be for everybody, you know, but already been happening in Scotland for a number of years, for example, and in Wales for a number of years. So we always kind of knew it was coming. The article also raises a very good point, though, about selective licensing. So this is one of these situations where it wouldn't grow like this from the ground up. You've got parts of London, certainly I've got business partners that own properties there, where there might be a selective license in place, which is £2,000 for every 5 years, let's say. There's selective licenses in place in some parts of London per room for an HMO. So it's a huge revenue raising exercise, which of course puts further pressure on rents at the ceiling level. But when you're already pushing rents to people's affordability levels in the first place, the landlord does end up taking a lot of the pain in terms of that cost of delivery and compliance. And with interest rates being where they are, things stop stacking up so much as well. So while in London there's normally equity in those properties, there's normally an element of liquidity, but if it's something you're going to sell to another investor, I think a lot of people start a year like this and think with the intention of selling their properties, and then they realize the reality and some of the stuff we were talking about earlier on in terms of the liquidation costs, in terms of agency, in terms of just stopping your rental. If you want to try and sell a property vacant, you stop your income, and it's probably going to be 6 months before you get the capital back, silly as it might sound.